to the Fabian Society Economy and Finance Policy Group launch event on tax after coronavirus. I won't speak for too long as we have 5 fantastic speakers to hear from today, but to introduce myself, I'm Louisa, one of the co-founders of the policy group. Tax has always been a topic of interest for me, having obtained a master's in international political economy, qualified as a chartered accountant, and I've been working in practice for the past 11 years. This included 2 years in the Cayman Islands many years ago, which obviously raised a few questions around tax, shall we say. We published our first batch of work on tax reform in December, and we think now is the time to implement changes in terms of tax policy. We know that public opinion has been shifting in this area, and there's a real opportunity to discuss new and innovative tax policy. As the pandemic highlights inequality, we enter the worst recession for 300 years. We see rising unemployment, growing precarious employment, and public debt exceeding the size of the UK economy. All whilst interest rates remain stubbornly low, meaning that fiscal policy becomes more important as a lever. To let you know that the event is being recorded and live streamed using the Fabian Society YouTube channel. You can participate using the hashtag #TaxAfterCoronavirus. Our Twitter handle is @FabianFinance. We're delighted to be joined by so many guests today. We had over 200 people register, and we're pleased to be bringing together expertise from finance professionals, legal, academic, and political backgrounds. So we'd like to make the event as interactive as possible. Please do post questions using the Q&A function throughout the event. You'll have the opportunity to raise these with the panel after they've presented. Before we hear from the panel, I'm just going to hand over to our fellow co-founder, Dr. Michael Weatherburn, for a quick summary of the work we're doing with the Fabian Society.
Thank you, Louisa, and welcome to everyone this evening. It's a great pleasure to be here. As Louisa said, my name is Michael. I'm an academic at Imperial College by day, and by evening, as it were, I'm very involved in the Fabian Society, including in this Fabian Economic and Finance Policy Group. Many of you will know that the Fabian Society is old and has been very influential. In fact, it was founded in 1884. The influence comes and goes, but is very measurable over time. We can measure quite easily that the Fabians have been very influential on political debate at important moments in British political history. The 1910s, the 1930s and 40s, the 1960s, the 1990s, and we would hope now. And historians, including myself, typically think of Fabian influence on the Labour Party, though there is a smaller research strand, lesser known, that also looks at the Fabian impact on the Liberal Party and even on the Conservative Party, which most people find a little surprising. But we also have influenced not just debate, but actual policy formulation, which is what we're here to do today. And the Fabian Society has been launching members-led groups over the last few years into 4 different areas of policy development. International policy has been going for several years and it's been very successful. A group on health and care, one on education, and this group on economics and finance, which we've been formulating for a year or so, and we're delighted to have you at this evening's launch event. The really exciting thing about the Fabian Society as a think tank compared to other policy development organizations is the Fabian Society is, of course, members-led. Louisa is a member, so am I. We met at a members event. And this gives us a chance to take our confidence and ambition forward into topics that we think are interesting and important, that we have expertise in, and that we can draw on specialists that we have contact with. And so we're starting this session, for example, on tax reform after coronavirus. We have several other projects underway in the Fabian Economic and Finance Policy Group. They will be in order, probably pensions, which we'll start work on quite soon and launch an event perhaps after the summer. One on universal basic income around the same time. A longer term one on procurement between the public and private sector, and other areas of great importance to the world, such as digital finance. And without further ado, I'm very happy to hand you over to our chair this evening, Louisa Metcalf, who can start proceedings with our visiting speakers. Thank you.
Thanks very much, Michael. Without any further ado, it's my pleasure to introduce you to our first speaker for the evening, Dan Carden MP, who is a Shadow Financial Secretary to the Treasury and MP for Liverpool Walton.
Thank you very much, Louisa, and it's a pleasure to be here with the Fabians. As a graduate of the LSE, I've always felt a close affinity with the Fabians, and I was able to work closely with them in my previous role in the Shadow International Development Brief. So I thought I'd just start by outlining the current situation where we have GDP falling by a quarter between February and April. Since March, communities up and down the country, families, workers, the self-employed, traders and business owners have all had their way of life changed beyond recognition, where a public health crisis has become now an economic crisis. The lockdown meant the businesses had to close, work dried up, and all but essential parts of the economy came to a standstill. And I just want to give some numbers around this. So we've had more than 9 million jobs furloughed, more than 2.5 million claims for self-employed income support. We know that between 1.5 million and 3 million people have received no support whatsoever. Over 3.5 million people have already been moved onto universal credit since March, and the real unemployment crisis is looming in the final quarter of this year as the furlough scheme winds up. And if we put the current situation created by the coronavirus pandemic on top of the existing situation that we had, that even before the pandemic, we were living in a dangerously unequal world. And we had the IFS and the Deaton Review warn that extreme wealth was accumulated by taking rather than making, of runaway incomes for high earners and rises in deaths of despair at the other end of the scale. Yet during a decade of austerity, we know that the richest 1,000 people increased their combined wealth by 183%. And today in the UK, the 6 richest people own more wealth than the poorest 13 million combined. And we had the UN Rapporteur on Extreme Poverty state that 14 million people in the UK were living in poverty, 1.5 million of those destitute. So the real challenge coming up ahead of us is going to be restoring our public finances on top of those challenges that we face. The UK is facing a major challenge to rebuild its tax base and restore public finances that fund vital public services. And so there are things that the Labour Party are pushing for right now. We need far greater transparency in our tax system. Just recently, HMRC reported on 111 tax reliefs with a combined estimated cost of around £155 billion in 2019 to 2020. And we know that they have little or no monitoring around their efficiency or who benefits from those reliefs. And we need a national effort and international leadership on tax avoidance. There is rightly public anger and frustration towards companies that refuse to play by the rules. Multinationals, often high street brands, make sometimes hundreds of millions of pounds, but because of profit shifting and dodgy accounting practices, they get away with paying next to no tax. And so we want to see a robust plan to stamp out tax avoidance and evasion, so that everyone pays their fair share and we can raise the revenue we need to transform our economy and society for the better. And it's worth me mentioning also that to do all this, we need a properly resourced HMRC. HMRC firing on all cylinders. And so it makes no sense whatsoever for the government to be making 2,000 redundancies at HMRC, right when staff are going through the heroic efforts to deliver government support schemes, and as we face that challenge of rebuilding the public finances post-coronavirus, or as we emerge from coronavirus. And so we are calling on the government to immediately halt all those redundancies and office closures. So there's been some interest in Labour's position on taxation in recent weeks. And let me be clear, Labour isn't proposing tax changes during the immediate crisis. The last thing we want to do is to take demand out of the economy during a recession. But are we looking at ways to make our tax system fairer as we emerge from the pandemic? Absolutely. We're living through the most extraordinary demonstration of the value of public services. And if we want to sustain a rich network of properly funded public services that are resilient to shock, If we want to rapidly decarbonise our economy, invest in green infrastructure and create good, secure jobs, and if we want to tackle inequality and give our key workers the new settlement they deserve, then at some point progressive tax reform will of course be part of that answer. It's clearly an issue that's now high up on the political agenda. The Financial Times is reporting that the government is planning tax rises in the autumn, and the Conservative Party are polling their members on tax rises and wealth taxes. What we do know is there can be no going back to business as usual. Just 6% of the UK public want to return to the pre-pandemic economy. And fundamentally, we in the Labour Party believe in a taxation system that tackles growing income and wealth inequality. That's the cornerstone of a better, fairer and more sustainable economy. And Keir and Annalise and I have all been clear that we cannot have a repeat of the last decade where those with the least and working class communities were forced to pay for a crisis created by casino capitalism in the banking sector. So Labour stands for a fairer distribution of wealth and power in society. And we do think that the very wealthiest should contribute their fair share. There can be no doubt how the UK rebuilds our public finances as we emerge from the coronavirus will be a major topic in the months ahead. And I am genuinely really interested to hear from the panellists who I've been working closely with in the recent months. And I'm also looking forward to hearing the views of Fabian members up and down the country. So thanks for having me as part of this discussion, and I'll leave my opening comments there.
Thank you very much, Dan, for coming along and giving us an insight into the Labour Party response to... Oh, sorry, there's a little bit of feedback there. I don't know if... Oh, okay, that's fixed itself. We agree it's really important to look at new policy tools to ensure we address the growing inequalities exposed by coronavirus. And I'm sure there'll be many questions on that coming in. We're delighted to be joined by our second speaker this evening, which is Richard Murphy, who is a chartered accountant, tax justice campaigner, professor of international political economy at City University, and co-founder of the Green New Deal.
Thank you for inviting me. I've written some papers with the Fabians over quite a number of years and have been a member. So it's good to be here to talk about this issue. Let me agree with Dan straight away on one very particular issue, and that is this is not the moment for tax increases. That is the very last thing that our economy needs right now, because every pound we take out of the economy now is a pound taken out of demand, and a pound taken out of demand means that there will be less spending power. And right now we are desperately short of spending power in the economy. It is that which is keeping people unemployed and is going to leave people unemployed. So the questions that are coming up about how we're going to raise tax to pay for coronavirus are emphatically the wrong questions. Now, as a modern monetary theorist, I would also say, look, we've already paid for coronavirus, and therefore, actually, that question is in itself the wrong question. If you ask how we're going to pay for coronavirus, you're not actually asking how we pay for what has already been settled, because the government has already paid for it. Instead, you're asking how do we actually clear QE, and we've never cleared QE, or how do we force people to stop saving with the government when vast numbers of people want to save with the government. So I think this is not the moment for that discussion about tax rises. But I do think, again, and I agree with Dan entirely on this, that this is the moment to actually realize that society is changing radically as a result of a shared common experience we've been through, something none of us expected, but which has been this lockdown, the crisis, the feeling of a totally different society that is coming out of this. And the sentiment is that literally we have been through something together, and we are now expecting the new normal to be different from the old normal. And my belief is that many people will be looking at the tax system and saying there's radical reform required here. It does need to be more progressive, but it also needs to be better managed. Again, I found like I'm echoing Dan, but I want to give you an example of one of the things that I think is really important at the moment. I was actually doing some research today looking at figures on tax collected in the UK. And I compared two documents. One is the whole of government accounts for 2018-19, which was issued literally yesterday, 16 months late, one has to say, and wholly inadequate for that reason. And the second one that I looked at was the budget statement for 2020 issued in March. And I compared the figures for tax collected by the two for the same year, 2018-19, and they are £50 billion different. Now, that is how bad our current economic management of tax is. We actually can't even agree what our tax is. And on some things like national insurance, the difference between the figures as per the audited accounts and the budget were £17 billion. Clearly, there's something wrong here. We need to actually go back to fundamentals and ask, have we got the right structure for managing the tax system of this country in place? And my answer is quite simply no. There isn't a clear ministerial line of responsibility. There isn't a coordination between how HMRC account and budget and how the Treasury accounts and budget. And so we need to get this right to communicate tax effectively. Again, I looked at the tax gap data recently issued with the National Audit Office report out today, with the National Audit Office saying to HMRC, who audit their own work in the tax gap, which is absolutely absurd. Why are they checking their own work on the tax gap? There should be somebody externally doing it. It should be the National Audit Office actually undertaking the tax gap analysis. And they've just said, look, HMRC, you're using experimental data. And we have seen massive restatements which don't look reasonable to my mind. So tax management is one of the issues we're going to need to look at. We're also seeing a focus still from HMRC on reforms which feel like they belong to another era. For example, the Making Tax Digital reforms, which are going to be imposed on small businesses over the next couple of years or so, which are going to massively increase their admin workload at a time when many people are going to be struggling to get used to self-employment because there's no other option available to them. Think about better methods of collecting tax than we have done. So I'm really quite concerned that the admin structure of tax is wrong. Let's come on to some of the actual tax issues that we face though. And I know Robert is going to talk about wealth tax, and Dan's already, I bet he does talk about wealth tax. I see a smile, so that indicates I might have guessed correctly. Wealth taxation is clearly an issue. I personally don't believe that this is the moment for a wealth tax. That's not because I don't believe in wealth taxes. I do, and I know Andy and I have had this exchange as well. I happen to think that we are in a situation where it would be easier to collect revenues from income from wealth than it would be to actually create a wealth tax at the moment. I'm very keen not to disrupt too much of the system when we're going to be fragile by Brexit, when we're going to be imposing lots of issues on society anyway, when people are going to be unemployed. We don't need too many extras, but we could, for example, increase the capital gains tax. We could simply equalize the rate with income tax. We may want to consider indexation allowances again, but we could do that. More important to me is the fact that, and I'm showing my left-wing roots here, but I find it quite offensive that income from investment income is taxed much more lowly than income from work. If there are scroungers in society, it's those who live off investment income because they don't pay anything like the same rate of tax as those who actually have to work for a living. I find that completely bizarre. Of course, part of that difference is national insurance, but it's by no means all of it. We should, I think, have an investment income surcharge again. Looking around the speakers, I'm definitely the oldest. I might be the only one who can remember the investment income surcharge, which disappeared in 1985, but which was a part of my own accounting training, which was 15% extra income tax over the normal rate on investment income to basically compensate for the lack of national insurance. Why not? We should be looking at reform of corporation tax, not just at large company level, where an increase in rate plus an extra capital allowance system would make a lot of sense and incentivize investment, which is going to fall off a cliff over the next couple of years otherwise. So I would increase the rate, but increase the capital allowance rate at the same time. I think that could be effective. 30% plus 100% capital allowances is a real incentive to actually invest. But the small company tax system is also wholly failing at the moment. Not only are we not collecting tax from millions of companies, maybe millions of companies, only 1.5 million companies pay corporation tax in the UK. There are 4.5 million in existence, and the revenue don't know what 3 million of them are doing. It's time we got automatic information exchange from banks in place to the revenue to make sure we can trace income in the UK and stop abuse there. But we should also be stopping people hiding their income. I think there'll be a comment from me in the Sunday Mirror this weekend about high earning people who are hiding their income in companies and not distributing it or lending it. We should go back to having a concept called closed companies, where if a company sits on a great big pile of cash and is owned by an individual, the company should be forced to pay out a dividend or deemed dividend. So the individual pays income tax on the income they've earned. We should not be providing easy tax shelters. To compensate at the other end, though, we need reforms. But let me be clear, let's not talk about in reintroducing 10% tax rates. They've always failed. Let's not talk about increasing the personal allowance, because that's a scattergun approach. We need to redistribute what we can collect from the higher end. And that should actually be looking at universal credit reform, changing the taper relief, increasing child benefits. Let's think broadly about what tax means in this context, because I think that's necessary. We have to have a more progressive tax system. In the context of the world we're going to live in, the system we've got is unfair. The work I did earlier this year when I looked at wealth taxes and who was paying most shows yet again that the lowest 10% of earners have the highest effective tax rates, and those on the highest level of income have the lowest effective tax rates. This is wrong. We have to reverse that, and we can, but we have to start with the low-hanging fruit. And my low-hanging fruit would be, let's tax the income from investments much more heavily. Let's look at how we can redistribute that, and then we can deal with the finesse and the refining the system later on. But getting the management right is critical as well. And at the moment, the revenue had been allowed to build a corporate model of management of taxes in this country, which is a disaster in terms of delivery of public service. Thank you.
Thank you very much, Richard. Lots to think about there and lots of great policy ideas, which I'm sure we'll have lots of questions on coming in. Just to remind guests that if you have any questions or anything that's been said, please do use the question Q&A function, and we'll get back to you after all of the panel have spoken. I'd now like to introduce you to our next speaker, Professor Rita De La Feria, who is the Professor of Tax Law at the University of Leeds and International Research Fellow at Oxford University Centre for Business Taxation. Thank you for joining us today, Rita.
Thank you. I'm just going to try and share one slide. Okay, and this probably gives you an inkling of what I'm going to talk about. I'm not going to present any more slides than this one. What I'm about to say is counterintuitive. For the majority of people that are going to be listening to me, the reaction, the emotional and instinctive reaction to the slide will be a question mark. So how can you possibly tax the rich with a VAT? And I'm going to try and say, and it's about 10 minutes that I have, is that this is actually quite possible. So it all starts with this idea that general consumption taxes, as opposed to income taxes, are regressive in nature. Now, there will be economists, there are some economists on the right side of the spectrum, primarily in the US, that will tell you that the income taxes, that consumption taxes are not really regressive, that they are proportional to income received. I am not a subscriber of that view. I believe that VAT or general consumption taxes in general can be regressive. However, the issue is, how do we address that regressivity? Now, the way we have been doing it until now has been through the use of reduced rates of VAT, zero rating of essential products, or use of exemptions. This is not a UK issue. This is how we have traditionally done it around the world. And this is how it's done across almost all European countries as well. Now, the issue is, though, that this way of doing things causes massive costs. There is a massive amount of litigation in courts going on about whether something is zero rated or standard. Everyone that is listed this will be filled with the Jaffa Cake story. Is it a cake or is it a biscuit? It gives rise to loads of planning and avoidance opportunities. I can tell you, for example, that in the last 2 years or so in the European Court, of all the avoidance cases on VAT, only 2 did not concern reduced rates or exemptions. So almost every litigation at European Court level is about the use of reduced rates or exemptions. So it has very serious costs. And the biggest of all is actually something that both Richard and Dan already have referred to, which is there's a massive revenue cost. And the revenue is not something abstract. As Dan referred in his presentation, revenue is really new hospitals and new investment in public services and new schools and new policemen on the street, etc., etc. And when this is all over, and I also subscribe to the view of other speakers that this is not the moment, but when this is all over, we will have even bigger inequalities than we have now. And the best way to tackle those inequalities will be through revenue, through public services. So the issue is whether all those costs that exclusions from the VAT base have compensate for the gains that we get. So do we decrease the regressivity of the VAT? Do we protect lower income households? And the truth is that probably not so much. Now, I don't have access to the UK data, so I can't make specific assertions on the exact UK numbers. But what I can tell you is that I have done with a co-author papers that looked to household consumption data across 3 different countries: a low-income country, and a high-income country. And the results are similar across the board. The majority of savings, even when the reductions in the VAT are passed on lower prices, which is far from linear, but even when they are passed on lower prices, the majority of savings go to the richest households. And the reason for this is that rich people consume more, even of essential products. So what you have is a system that is subsidizing the consumption of rich people. It is subsidizing my consumption when I buy books. It is subsidizing my consumption when I go to the opera. It is subsidizing my consumption when I buy guacamole. So in essence, the VAT system as it builds, it actually is helping the rich. Now, in some countries, this is the only way forward. You don't have a developed welfare system. So the only way to protect low-income households is through giving exemptions or giving low rates of VAT. This is not the UK case, and it's not the case across Europe. We have a developed welfare system capable of directly compensating low-income households without exempting from consumption taxes people like me. There is no reason to subsidize through the consumption tax system rich income households. So what we are proposing in essence is that we compensate directly through what we call the progressive VAT, which is a real-time transfer of all the VAT paid to lower income households, but not the restitution, the devolution to high income households. So the way it would operate is, in essence, you would go to a shop, you would buy food, you would give your tax number, and this is all software that already exists in many countries for combating fraud, for example. You would give your tax number and the system would immediately identify you as a lower income household and give you the credit for the VAT that you have paid in the shop. Now, if the system doesn't identify you as a low-income household, then you pay the full VAT amount, and that's left at that. So we need to think about imaginative ways of collecting revenue. When we get out of this, I suspect there won't be that much income to tax. There will have difficulties both on personal income tax and on corporate income tax to collect revenues. So we cannot afford, in my opinion, at this moment in time, to give subsidies to rich income households that only increase inequality in our tax system. Now, I will repeat this. I know that this sounds counterintuitive. I know that the majority of people are thinking, you know, if I'm thinking straight. And I obviously could give a much longer presentation about our papers and how we come up with the results. But my honest feeling is that looking at the situation that we have now, we have to think outside the box on how we can reduce inequalities. And consumption, we have to look not only at income taxes, but at general consumption taxes. And that's it. Thank you very much for your attention.
Thank you very much, Rita. It's great to hear arguments in favour of innovative new policy ideas. We're lucky to have so many great speakers this evening, so I'd now like to move on to our next speaker, Dr. Andrew Summers, Assistant Professor of Tax and Private Law at the London School of Economics, who will be discussing his paper, How Much Tax Do the Rich Really Pay?
Hi everyone. So I'm going to be taking you through this evening very quickly a few current research projects that I have been undertaking with my colleague Dr. Aaron Advani at the University of Warwick. Can everybody see my screen currently? Yeah. So first thing that I should say about this research is that it's based on anonymized data accessed from HMRC. We're very lucky to have access to this data to produce new research that hasn't been published until very recently. So I should just give the standard disclaimer that this is our analysis rather than HMRC's. So the three things that I want to just go through this evening is some research that we've been doing on capital gains particularly, and how that affects our interpretation of UK inequality over the past 2 decades. Then also some recent work related to that about looking in more detail at how much tax the rich actually pay, taking into account all sources of their income and also tax reliefs and deductions that they might be able to claim. And then finally, I want to just alert you to a current project which is happening at the moment and will be reporting by the end of this year on this critical question about whether the UK should have a wealth tax. So just to start with some of those results on capital gains, the really important thing to understand about capital gains is just how highly concentrated at the very top they are. When people tend to think about capital gains, maybe what you might initially have in mind is something like somebody selling a second home, somebody of relatively modest wealth in that sense. But really, the most important thing to take away from this is that here, if we're looking at just those individuals who received over £100,000 in gains in a single tax year, so everyone on that shown on this graph is already extremely well off. Even within that group, just how concentrated capital gains are. And if you look to the far right hand side there, that bar represents the top 1,000 individuals in the UK, but ranked by the amount of capital gains they received. And you'll see that that top 1,000, to get into that group, you had to have minimum gains of £7 million in the year. And on average, that group had £14 million in gains each. And those gains are clearly not coming from second homes. Where they're coming from almost exclusively is by business owners, particularly the sale of unlisted shares, so shares in private businesses. And the concern here in particular is how easy it is in some cases to repackage what would otherwise be taxed as labour income into gains and therefore receive very low tax rates. So an important part of the narrative through the austerity agenda of the past decade was that although everyone was feeling the pain, this was something that was also affecting the incomes of those at the very top. And the claim was repeatedly made that actually, according to official statistics, inequality was not rising during the period of austerity. And it's important to emphasize, and what we show in this new research, is that that was a claim that was made on the basis only of taxable income. So those statistics on which inequality was not rising, which is shown here essentially by the blue line on the graph, that was based on information that the Office for National Statistics and HMRC were collating based only on taxable income. But as I've shown you, those at the very top of the distribution are able to receive their remuneration in the form of capital gains. And once we take that into account, actually we see a different story in the path of the top 1% share over the past 2 decades. So first, to observe from this red line that includes gains, that the top 1% share is much higher, including gains. That's because those gains are so highly concentrated, but it also affects the trend. And so what we see is that actually through that period from 2010 onwards, when we include gains, actually we see a rising level of inequality in terms of top shares. And that's even more the case when we zoom in particular on the top 0.01% share. I don't know if you can hear the emergency vehicle in the background. That's particularly true when you zoom in on the top 0.01% share. That's the top 5,000 individuals in the UK. When you include capital gains, those 5,000 individuals received over 3.5% of all the income and gains in the entire economy. So it's really quite a different picture of inequality when you take into account those capital gains. So something else that we look at in this research is what's the impact of those capital gains and other sources of income and tax reliefs and deductions on the amount of tax that the rich actually pay. And so what you're seeing here with the grey line is the headline rate of tax on earnings. So if everybody was paying the amount of tax that you pay on earnings with no deductions or reliefs, then the average tax rate would look like this. It rises until it reaches 47%, that being 45% for the top income tax rate and 2% national insurance contributions. But actually what we find when we look at the tax data is even just based on income only, once you take into account deductions and reliefs, that line is no longer rising to a peak at 47%. In fact, it actually peaks only just over 41% on average. Then when we take into account capital gains as well, you can see that actually the tax system, the personal tax system, is effectively regressive above around about £200,000. What that means is the more income and gains that you have in total, actually the lower average tax rate that you pay on average. And so these lines that I'm showing you here is the average across all individuals. But something else that it's really important to get across is just how much variation there is in the tax paid between the rich at the same level of income and gains. So that red line is the same one that you saw, which is the amount of tax paid on average. But that conceals all this variation where actually we have about 10% of individuals, that's the P90 line at the top, who are paying something close to the top headline rate. But we then also have groups within the rich who, primarily due to the receipt of capital gains, are able to get extremely low effective tax rates. And so actually, quite strikingly, for those on £1 million in combined income and gains, 1 in 4 of those individuals are paying a lower tax rate than individuals receiving just £15,000 in income. So in the research, which I can share with you after this event, we look at how much revenue could be raised from some reforms that would essentially ensure that more people were paying closer to the headline rate. And the key point to make here is that this is revenue that could be raised without increasing headline rates at all. So without increasing the top rate of income tax any higher than it is currently at 45%, if you just got more people paying closer to that rate, the rate which most people think the rich pay anyway, then there's potentially up to about 20 billion per year on the table from that reform. And then just the final thing that I want to alert you to is a current project that's happening right now on the question of whether the UK should have a wealth tax. Richard has mentioned briefly this already. I suggested going to the project website, ukwealth.tax. There's all the information on there. Essentially what we're doing in this project, we're keeping an open mind about this question, but we're soliciting evidence from a whole network of experts on tax policy. The evidence papers from that project will be published in October, and we will publish a final report in December, looking at ways of designing a wealth tax for the UK, and particularly anticipating Richard's fair comments earlier, we certainly don't intend that this work on a wealth tax displaces other potential proposals for taxing wealth, but we think that it is important to evaluate this option and critically to establish whether it would be administratively feasible and how it could be delivered. So that's everything. I'm happy to take any questions on that. Thanks.
Thank you, Andy. We'll just have our final speaker before we open up to questions, but it's a great presentation and links well to an article that we published in December around equalising taxes on income derived from capital with income from wealth, payroll income actually, sorry, and also looked at wealth taxes. With that in mind, I'll move on to our final speaker for the evening, Robert Palmer, who is the head of Tax Justice UK. We'll be talking about his recent work on assessing public opinion on tax reform.
Thank you very much, and it's great to be on here. So just for those of you who don't know, Tax Justice UK is a campaign group, and our mission is around building political momentum for progressive tax reform here in the UK. And we operate as a bit of a bridge between people like Andy and Richard, who do a lot of the thinking and the analysis and proposals on the one hand, and then people like Dan and others in power to try and build political support for reform. We wanted, in order to really understand how we could be successful, to go out and ask the public their views on public spending, wealth and tax. So along with Servation and the University of Sheffield, we've spent the last 6 months doing a number of focus groups around the country and a couple of big polls. We started in December and we did the final groups in June. So we've got a real wealth of data. And I think some of this will probably not be surprising to those who've been either following the news or following politics, but I think there's some important points. And the first point really is that people are fed up with austerity. And you can see that resonating in political statements from people like Boris Johnson saying that austerity is over. In our focus group, we found almost no one proactively saying we should have tax cuts. So we're in a political situation where the public supports higher spending. And there's also some support for, overall higher taxes and support for some people to pay more tax themselves. Now, I do agree with Richard and Dan that a middle of a recession is a really bad time to be raising taxes, but this is a debate that we are going to have over the medium term. One of the things I think as a point of warning is there's real concern out there around government waste and fraud. One participant in Hastings said, I would pay more tax if I could see a real change: education, minimum wage, cost of living, less poverty. A lot of people have said versions of, I feel as though I'm paying more in and getting less out. And I think this is one of the narratives that's been quite strong by those who believe in small states, which is getting across this idea that government is just full of waste and fraud and abuse. And people are pretty cynical about about politicians in particular. You know, there's broad support for the idea that we all pay in, and that helps support our public services. But I think it is important to also understand that people are nervous about how government money is spent and whether it's wasted. We were really interested to understand attitudes around wealth and what do people think about wealth. And this is a debate that we're continuing to have. And, you know, Dan flagged up at the beginning that there's huge amounts of wealth inequality in this country. And when we talked to people, people did see that playing out in their local communities, and they could see the wealth inequality between different people. However, I think it's also important to flag that I would say for the majority of people we spoke to, wealth is seen as aspirational. As one person said in London, wealth is enough to provide for yourself, basic bills, and a few luxuries. And so again, one of the things that came through really strongly is wealth for most of the people we spoke to was not necessarily billionaires and yachts and jets and really fast cars. Wealth was seen as about security and being able to look after yourself and your family, particularly when our public services are pretty threadbare at the moment. And so I think any arguments around having higher taxes on wealth need to be constructed in a way that's careful. Having said that, we also found quite a lot of support for higher taxes on wealth. In our poll, we found 88% of Labour voters said that they supported higher taxes on wealth, but 64% of Conservatives said the same. And then we also, in the focus groups, we drilled down into talking about specific taxes on wealth. So one of the ones that we talked about that's been discussed this evening was around capital gains tax. And we framed it as, the current situation is if you have income from wealth, you pay a lower tax rate than if you have income from work. And people, while most people hadn't heard of capital gains tax or didn't necessarily understand how the system worked, they felt that that was deeply unfair. And so I think there are definite ways in which you can make the argument for higher taxes on wealth and make the argument for a more progressive tax system, but you need to understand where you're starting from and where people are at. One of the things that we found in general was the arguments that were seen as sort of, to use a crude term, sort of wealth bashing, generally didn't go down bad. Generally didn't go down well. People, as I said, saw wealth as aspirational, although they would always point to a few individuals who were deemed to be undeserving of their wealth. Playboy heirs who had lots of money but didn't seem to work, or business leaders who seemed to be dodging their obligations. Which brings me on to sort of one of the final points, is that there was almost universal anger at tax avoidance. We found, I think 80% of people agreed with the idea that tax avoidance is morally wrong, even if it's legal. And I think there's a lot more political ground that could be made on tax avoidance and on loopholes and on making people feel that the tax system is set up in a fair way that helps support the types of public services that they want to see. So overall, I think we have a positive story to tell about where the public is at the moment. They're broadly in a place to the one and the policy positions outlined on this call. There's clearly strong support for a more progressive tax system. There's clearly frustration with austerity. And it's important, I think, for politicians not to hold back on setting out this bigger picture vision of what our tax system needs to look like after coronavirus. And, we've been through some really, really difficult times over the last coming months, but from a sort of position around thinking about how we build back better from this crisis, I think there are opportunities both politically and with the public to make the case that we will have a better society, we will have stronger communities, we will have the public services that we deserve if we have a more progressive tax system, and the public is behind that view. I've just given you an incredibly short summary of our findings. If you go to taxjustice.uk, you can find our interim report and some of our polling findings, and we'll be publishing the final report in September. Thank you.
Thanks very much, Robert. I'm afraid my video seems to have gone, but that's fine. We'll just move on to the Q&A now. So thank you for all the questions. I think the first question is from Kaelo. If you're able to turn on your mic and read out your question.
Hi, can you hear me?
Yep. Seems to be a technical difficulty there. Kaelo, are you there? Okay, in the meantime, I think we have another question from Liz Hind.
Hi, have I managed to unmute myself?
Yeah.
Hi, so I'm a small limited company director, and obviously part of one of the largest group of people excluded from help during this crisis. How can we make sure that people like me are paying a fair amount of tax in a tax system that we can understand and we can engage with, while we're not being dismissed as a bunch of tax dodgers as we were at the beginning of this crisis? Because I do pay myself through dividends, as the tax system has been set up and designed for me to pay myself through dividends, because I don't know when I'm going to make a profit in my company.
Okay.
Can I come in on that one?
Yes, of course. Thanks, Richard.
Well, I mean, I was senior partner of a firm of accountants that dealt with a lot of small companies over the years. I have changed my mind on this issue. At one time, I felt there was absolutely nothing wrong with paying dividends. I have to say I'm not at all convinced now. The tax system was not designed with this in mind. That is not the way that directors were meant to be remunerated. It is a paradox of the consequence of 19th century thinking on incorporation that this situation has arisen. We have a tax system and a corporate structure here that is wholly inappropriate for your needs. I actually wrote a paper about this in 2007 as a consequence of a case that went to the House of Lords called Arctic Systems at that time. If you search my blog, Tax Research UK, and put in Arctic Systems, you'll find a paper I proposed. And in fact, it was heavily considered by what was then, of course, a Labour Treasury. But in 2008, you might remember the world collapsed and it wasn't the time for tax reform. What I suggested was that, in fact, small limited companies, and I had a definition of what small meant, and it included, for example, less than £10,000 of share capital at that time, it might be bigger now, should actually be taxed as if they are transparent, as if they are limited liability partnerships, in effect. It's one of the reasons why I run Tax Research LLP, because I didn't want to face this situation. My income until I became a professor, I was on a very variable income, and I'm going back to that situation very soon because I'm leaving full-time employment as a professor at the end of this month. And I understand the problem that you have variable income. Operating PAYE in that situation is difficult. So the answer, I think, is that actually small businesses should in fact be taxed on a transparent basis, but be given effectively a cash flow basis of tax. And I think Rita will probably approve of a cash flow basis of tax for small companies here. This is the right way of effectively taxing a smaller business to allow for its capacity to pay, but to then make sure that the directors pay on everything that the business earns. And most small businesses are one-person companies, 2 or 3 people at most, and you can agree a split between you how it's done. I do that with an LLP. It works just fine and means that I can't be accused of avoiding tax by holding money back in the company, because everything that Tax Research LLP makes in a year is taxed on the partners. And I think that's the right solution. It's easy to do as well. We could transform the company law to achieve this very quickly.
Thanks, Richard. Andy, did you want to comment on this as well?
Yeah, sure. So I'm quite sympathetic to Richard's suggested solution here, but I just wanted to come in and comment on the this as it applies to the current crisis. So I think, unfortunately, Treasury has missed in my view, an important trick here with the taxation of small businesses. When it came to the taxation of self-employed, quite rightly, I think Rishi Sunak came up with a rescue package for the self-employed, but seeded at the same time the idea that the quid pro quo for this would be, in the longer term, reform of the way that we tax the self-employed, and in particular, moving towards alignment of the national insurance contributions by the employed and the self-employed. And I think that that was the right move, to offer assistance in the short term, but tie it to a sensible longer term reform. And I think they should have taken the same approach in the case of small businesses. They should have offered some form of rescue package for small business owners, but likewise it should have come with the kind of notification that in the longer term there was going to need to be a reconsideration of that low rate of tax on dividends compared with employment earnings. So that would be my perspective on this.
Thanks very much, Andy. I think we're going to take another question now from Tony McDonald.
Hello, can you hear me?
Yeah.
Yes, my question, which might look a little bit sort of aspirational, I suppose, is that my impression over the last 30, 40 years or so is we've become a country where we want world-class services, but we don't actually want to pay for them or allow a government to pay for them in really the only method open to it, which is taxation. And I feel this particularly applies to income tax. So do the presenters feel that it is time to have that honest and open discussion with the British people, that if we want these world-class services, we must look at a rise in income taxation to pay for them, obviously targeted at those most able to pay? As I said, it might not seem quite as a technical question as perhaps others, but I just, from a political point of view, is it time to have that honest and open discussion?
Thanks, Tony. Dan, would you like to answer this one?
Yeah, thanks, Tony, for that question. I've really enjoyed getting into this job over the last couple of months, and I think the starting point for me has really been to get to grips with the tax system. I talked a little bit earlier on around transparency. When you look into tax avoidance and the massive complexities all around that, I think there's a lot of work to be done before we start saying that we're not paying enough taxes in this country. And I think the type of discussion that we've had tonight, trying to give people, but also people who run businesses, confidence in the tax system, that actually everyone pays their fair share. And I think what's clear from all the presentations and the different parts of the tax system that they focused on is that somewhere along the line, there are groups of people who aren't actually paying their fair share. I think that's what gets real public anger across the country. And so, like in my constituency, where you have small businesses that may be a shop front and maybe competing with a multinational company that provides a very similar product or service, and yet they know that they're not playing by the same rules. And so I think there's a lot of meat on the bone in that part of the discussion that we're having. And that's certainly where I'm focusing my energies at the moment. Thanks.
Thanks very much, Dan. I just want to try and come back to Kaylo's question. If you're able to unmute, please.
Hi, I think I've got it working this time.
Yeah.
At least the screen is telling me I have. Great. So the question I asked, first of all, was about pensions. And as I'm sure many of you will have seen, the Public Accounts Committee has asked the government to do a review of pensions tax relief on the basis that the government doesn't really know whether it works. And I'm wondering firstly, whether there have been any thoughts about this from the Shadow Cabinet. I realise it's a cross-departmental area. And whether anyone else in the panel has views on how we could get more money from pensions tax relief without jeopardising incentives to save.
Thanks, Kaylo. I'll open that up if anybody. Robert, would you like to take that?
Yeah, I mean, it's a very good question. I mean, I think when it comes to tax, a lot of this is around a lot of it is around priorities, and we have some difficult competing priorities that we need to set off against each other. The current status quo is that the people who most benefit from pension tax relief are the richest, and those who have the most private pensions are also the richest. And we've done a little bit of work looking at both the intersections between tax justice and gender and race. And if you're a woman or a person of colour, you have a significantly lower amount of private pension savings than someone who is a white man. And so I think when we're thinking about our tax system, we both have to think about what is effective and also what is fair. There's been quite a lot of support from various different think tanks and academics of having a flat rate of pensions tax relief so that everyone gets the same amount, because the current system is designed upon the principle that higher rate taxpayers get tax-free pension contributions because they then pay tax when they take down their pension. But actually most people who are higher rate earners during their lifetime are not higher rate earners when they become pensioners. So I think our current system costs a lot of money and benefits some very wealthy people. So that's kind of like my starting point. And just in terms of, it was one of the things that we asked about in our focus groups, and people are a bit nervous about changes around pensions for reasons that you can understand, but broadly speaking, supported the idea of people getting the same rate of support from government, no matter what their income.
Thanks, Robert. Would anybody else? Richard, would you like to?
Yes, I'd love to come in on this one because I've done a lot of thinking around this area over a long time. I mean, first of all, the PAC understated the cost of the tax relief because they buy the HMRC line that you offset tax paid on current pension incomes against the cost of the tax relief. But of course, if you cancel the tax relief, you would still get tax paid on current pension incomes from past contributions for a long time to come. So in fact, the real cost of the current real cost of the pension tax relief is 54 billion a year, not 38 billion a year, as they said. Now, put that in context, and 54 billion is actually one of the biggest department spends of all government departments. It's vastly bigger than many government departments spend altogether. So this is a massive element in government spending for which we have no known benefit. Let's be clear about it. It is a subsidy to those who are better off. Now, when we have arguments about we're paying for those who are poor and they're scrounging, actually, this is just a straightforward bung to the wealthiest. And I'm one of them, bluntly, because, yeah, I'm white, I'm male, I'm older, I'm coming towards retirement age, and I've got a pension pot and I've benefited from this, but I actually think that's wrong. But there's two aspects to it. One, why should I get, as a university professor, this isn't a surprise to anyone, I was a higher rate taxpayer, why did I get 40% tax relief on my contribution when most people only got 20%? Why was my saving worth twice as much as somebody else's? It wasn't. Why did I get that rate of relief? It's ridiculous. So I personally think that the rate should be flat. But I think there's a second aspect to this. And I'm just going to put this one in because looking at wealth in the UK, 81% of, according to the ONS, all assets held in the UK are in tax incentivized savings mechanisms. Now, that requires you to believe that people's homes are tax incentivized savings mechanisms, but they are because there is no capital gains tax on homes. And then we look at pensions and we look at ISAs. Add those three together and that comes to around 80% of total wealth, according to the ONS. So it's a very simple structure of wealth holding we have. The other 20% is the bit we tend to think about. The very, very wealthy hold that bit. But there's an awful lot of wealth, which is in those things as well. Why are we, at a time when we need to fund investment for a green transition, allowing tax reliefs on ISAs and allowing tax reliefs on pensions and not requiring that the money paid in be invested for the social transformation we want? So I would say if we're going to keep these tax reliefs, which go to the wealthy, ISAs should be entirely invested in Green New Deal bonds, which should be used to fund the Green New Deal. 70 billion a year goes into ISAs. It's a staggering figure, which most people can't believe, but it is 70 billion a year. 105 billion at least goes into pensions with this 55 billion subsidy costs. Yes, I do mean it's almost half of the pension contribution is paid for by subsidy when you're adding corporation tax, national insurance relief and income tax relief. It's not just the income tax relief we're talking about, why aren't, say, a quarter of the contributions being required to be invested now in a green transformation? So we need to think much more broadly about this issue, not just about the rate of relief, but what we expect in exchange for that relief. There's a bargain to be made on this issue, and the bargain is you fund the investment we need so taxpayers won't be paying for it, and there I'm breaking the MMT rules by suggesting there's a link. Some people have asked about modern monetary theory, but I believe that this is important.
Thanks very much, Richard. I think we have another question. We'll have one more round of questions, I think. Bren, are you able to ask a question?
Yeah, thanks. So a quick question for me. In my line of work, I do a lot of individuals who are not UK tax domicile, but are ordinarily resident here, and so escape a great deal of tax, given that they're taxed on a remittance basis rather than on a rising basis. So their worldwide income isn't subject to UK tax. And those individuals actually spend a great deal of their time here, but aren't taxed under the UK tax authorities, and so escape a great deal of tax. Is there merit in the idea of abolishing the difference between, or abolishing taxation, especially income tax and and capital gains abroad on a rising basis, on a remittance basis rather?
Thanks, Ben. Andy, would you like to answer this one?
Yeah, sure. So actually, as part of the work that we've been doing in HMRC using personal tax records, we do have another project specifically looking at non-domicile taxpayers. So as part of this work, we have access to the complete tax records of everyone who claimed non-domiciled status over the past 20 years, and we're doing a lot of work on that at the moment. Unfortunately, I'm not able at the moment to tell you any results from that work, but we will be releasing something on that later, hopefully this year. But I think that the bigger question related to that project is kind of two main things. So one is, what's the appropriate connection between an individual and the UK that makes it kind of fair for them to be liable to UK tax, and at the moment, or worldwide tax on their income and gains. And at the moment, we have this mix of the idea of tax residence and also tax domicile, which you were talking about. And I think that it's time probably to have a much bigger review of that domicile connecting factor. Obviously, some other countries do it differently. The US, for example, uses a citizenship basis. Other countries have a kind of graduated scale depending on the length of time that you've been resident in the UK. So that specific question of the remittance basis, I think, actually really ought to form part of a bigger review of these connecting factors for tax. And then the second point related to this, I mean, the big concern with non-domiciled taxpayers, I mean, there have been quite a lot of reforms over the past 10 years, sort of introducing this remittance basis charge and just inching up some of the tax that's paid by this group. But the concern in government related to this was this question of whether all these people would just leave the UK if we tax them more. And so that brings in this bigger question about tax and migration. How much does the tax system actually affect people's location decisions? And there's a whole load of anecdotes. You can name individuals, you know, Richard Branson and James Dyson left the UK, but these are kind of anecdotes, and what we need is kind of population scale data. And for other countries that have looked at this, actually the evidence that is kind of mixed and suggests that apart from a very small number of individuals, people are actually quite rooted in where they live. There are reasons why people want to live in London, for example, and I don't think that the evidence currently is that strong for large migration responses, but that is precisely the question that we're looking at currently with HMRC.
Thanks, Andy. Richard?
One very quick political point. Ed Miliband's best day in the 2015 general election campaign was the day that he proposed abolishing the domicile rule by far. Joe Morm and I were pretty heavily involved in that process at the time, and it really hit with the electorate, cut through, as the saying goes, and I think it would do again.
Thanks, Richard. The next question is from Andy. If you're able to unmute, please.
Can you hear me okay?
Yeah.
Yeah, hi, good evening. Yeah, it was a question really around the use of the tax system to actually stimulate investment and demand into the economy. So it was really, you know, we're talking mostly around tax as a revenue raising tool, but how could we be using it to stimulate economic activity and investment? And, you know, the classic one that springs to mind is around housing, you know, and obviously the shortage of housing. Should, for example, are there tax treatments that could be applied to investment in new build housing to you know, unlock that investment, create jobs in construction, all the associated industries, using it a tool essentially to create economic growth without having to, you know, without expecting government and government spending to do all the heavy lifting, as it were. Thank you.
Thanks. Am I okay to come to you, Rita, on this one, or anybody else want to come in on this?
Well, if you want me to comment on this, I mean, it's not my area of research, but I have views on generally how this is going to pan out. And I suspect how this is going to pan out is that the governments, national governments, are going to be using corporate income tax primarily to stimulate the economy. And they are going to use primarily personal income taxes and indirect taxation to get revenue. So policy will be divided up in two parts. Now, it is appealing, it is tempting to think that there's going to be loads of money that is going to come out of tackling avoidance or tackling fraud. And whilst I agree with the aim, and I actually offered to present a paper specifically on anti-fraud policy when I was asked to come in today. So whilst I agree with the aim, I think in reality the amount of money that we're going to get from that is not going to be all that is going to be needed. So I suspect what is going to happen is that the economy, the attempt will be to try and stimulate the economy by countries around the world. I mean, it won't just be the UK, by tax breaks on corporate income tax. And try to compensate that with increases on personal income tax and on indirect taxation. And this includes both VAT, but also excises, which are kind of the easy political choice for governments around the world, is to bump up excise. So I mean, so that's my general sense of what I think is going to happen. But I'll leave maybe to other panelists to speak specifically about the issue in the UK with housing. But this is a broad picture of what I think the action is going to come.
Thank you, Rita. I'll come to Richard next, please.
Relatively quickly, I've already mentioned that I think actually we should be linking pension tax reliefs, ISA tax reliefs, to investment, and that we could release up to 100 billion a year, I believe, for that reason, into things like the Green New Deal. And okay, I co-authored it, but actually that does require building social housing. If we do specific schemes with this in mind, though, which are sort of scattergun approaches, which has been the case with things like enterprise investment schemes and venture capital trusts and so on, the evidence is that such arrangements end up being another round of bungs to the wealthy, if I can be completely honest. They're repackaged by accountants and lawyers to become tax avoidance mechanisms. They aren't very good as a mechanism for directing investment. It's much better that we have generic schemes and require these collective investment savings mechanisms to invest in certain processes. And I would encourage Labour to think about a green investment bank to actually direct that money into building those new infrastructure projects we need, rather than relying on the market. Sorry, but I just don't trust markets to actually be responding to tax relief.
Thanks, Richard. Andy, yeah.
Yes. Yeah, well, just really actually to flag some work that I know Dan's been doing recently on the evaluation of tax relief. So I think the really critical thing here is that when we introduce tax reliefs in order to achieve some economic objective, whether that's to incentivize investment or some other kind of desirable activity, we really must invest the resources in actually figuring out whether those policies have been successful. And what successful means in this context has to be not only effective, in other words, do they to some extent achieve this incentive effect that they're claimed to have, but do they also do that in a way that's value for money? So in other words, tax reliefs tend to be very expensive, and to give you a really concrete example, entrepreneurs relief, which was this very low rate of capital gains that was supposed to encourage entrepreneurship, there turned out to be, after 10 years of this relief, hardly any evidence that this was effective. In fact, when in the last budget, the Chancellor admitted that something like only 1 in 10 people actually knew that this relief existed at the time when they set up their company, and turned out to cost over £10 billion over that period. And the critical point here, which is the one that I think Dan is planning to take forward, is we need to invest the resources in HMRC that enables them and Treasury and independent academics to actually look at the effectiveness of these reliefs, rather than just kind of assuming that they will do the job that they're initially supposed to do.
Thanks. Dan, would you like to?
Well, I should probably just come in quickly after Andy's kindly plugged my work. I wrote to Jessie Norman last week on this issue, asking for serious changes to how tax reliefs are monitored and the way in which information around that is published. And I think it's quite right that as we look to rebuild the public finances, where there are these reliefs and giveaways in the tax system, that we have a real idea of who benefits from them. Because, for me as a North West MP, does a tax relief benefit the North West as much as it benefits London? Does it benefit the wealthier in society over the poorer? These are enormous sums of money, and we simply can't answer those most basic questions. And I suppose just to flag, last week we had the stamp duty bill in Parliament, and I suppose that's the government's attempt to do exactly what the questioner was asking there about increasing house sales through a change in the tax system. And there are certainly some positives there, where if there is an increase in house sales, you'll see businesses gaining work, whether that's in house repairs and plumbing and whatnot. And so it does happen. I think the most important thing is we need to be able to monitor it and see the effects of any of those tax reliefs. Thanks.
Thanks, Dan.
There's one quick point if I could make from the National Audit Office report on the tax gap, which I think was out today. They've pointed out that the tax gap published by the Revenue, which is around 30 billion, excludes any consideration of tax reliefs and allowances, but which they say are specifically within the scope of the tax gap, and which, as Dan has just said, come to well over 100 billion a year. So when the Revenue claim the tax gap is only 30-odd billion, they're actually knocking an awful lot of factors that could be thought about as part of the tax gap out of consideration, and that's wrong. That's one of those reasons, again, why we need to reform the way that the Revenue is looked at and the way we monitor these things.
Thanks, Richard. Rita, would you like to pick up on that?
Yes, so I'm just going to add a little bit to what Andy and Dan just said about the importance of evaluating tax expenditure. Every relief that is being given in the tax system has massive consequences in terms of revenue. And whilst in some cases it's made with fantastic intentions, the results are actually that they increase inequality. So I just finished a policy paper with a co-author of mine who is based in Switzerland, in which we actually have asked the G20, when they meet next November, to assess tax expenditure on the basis of not only generally their cost, but also their impact on inequality. So we would like to see tax expenditure, if the impact of tax expenditures on inequality to be assessed on a systematic basis by the G20 countries. And this is because a lot of the times we actually do not know what is the distributional impact of tax expenditure. And that is actually quite serious, because if we're trying to deal with inequality, we have to understand first where the problem comes from. And we need to understand if the reliefs we are given are actually making the problem worse than what when we had it before we increased we included the relief. So I think that this would be a first step, not only measure, but actually assess the distributional impacts of tax expenditure.
Thanks, Rita. I think we're going to come to our last question now, which is from the Reading West Berkshire Co-op. If you're able to unmute your mic, please. I can see you on the screen. Are you there? Okay, I will try and read out this question if I can find it. It's, given the increased risk of poor mental health for those in debt, how can our policy development promote compassionate tax recovery for both national and local agencies?
Hi.
Oh, sorry.
Sorry, that's too late now, but yes, beautifully read. Thank you very much.
Okay, anything else to add?
Just knowing that compassionate tax recovery gets more money in, for example, council tax.
Okay, thank you. Could I ask all the speakers to come in on this and maybe add some closing remarks as it's the last question, please?
I'll come in very briefly. It's a really good question, and I think while HMRC talks about taxpayers as customers, I'm not sure if people feel as though they get particularly good customer service, and it's you know, a balance between applying the law properly and also being compassionate. You mentioned council tax, and local government is now one of the biggest users of bailiffs in the country to collect unpaid council tax bills, and people can still go to prison for not paying their council tax. And yet at the same time, you see very wealthy individuals and big companies get away with what feels like deeply unfair conduct. So it feels as though a bit of the sort of priorities that our tax authority has are skewed. But yes, it's difficult because, you know, the tax authority's role is to bring in money, and there are laws that have to be applied. But I suspect for a lot of people on the receiving end of HMRC's investigations, it doesn't feel as though they're being particularly compassionate.
Thanks, Robert. Andy?
Yeah, I mean, just to make a more general point arising from this, which is that clearly there are occasions in which HMRC doesn't kind of conduct itself as it should do, and cases where the sort of procedures for these sorts of policy do lack compassion. But there's also an issue here, again, to go back to what Dan said about resourcing. In a situation in which the department as a whole is so severely resource constrained, that's one of the problems that leads to kind of blunt-edged tools that sometimes we see in the context of collection and even tackling avoidance. And so we shouldn't think of this as a sort of, if we starve HMRC, these problems will go away. Actually, I think they get a lot worse. And so it ought to be part of a progressive tax system and a kind of progressive tax authority that it's properly funded to do this work.
Thanks, Andy. Rita?
Yes, so I have done some work on this area of HMRC approach to taxpayers. And my biggest concern, and whilst I subscribe to what Andy just said about the resources and the conundrum that HMRC workers are often in, and the pressures that they suffer, there is also an issue of culture. And I worry a lot about what is known as the low-hanging fruit phenomenon, picking up on those that cannot defend themselves. And this makes me extremely uncomfortable as a natural progressive person, that we go after those that we perceived as defenseless, and we are more reticent on going after ones that are perceived as having tools to defend themselves. Now, this is not necessarily the fault of individuals, but is a fault of I think, or the results of my research is that this is a result of a mixture of incentives that have been given to HMRC, not least the fact that often bonuses and payments are dependent on performance factors that are to do with the recovery of money. And if you only tell people that it's about the recovery of money, of course, people are going to go after the low-hanging fruit. It's easier. The cost-benefit analysis, the efficiency considerations are clear. So this makes me, this is an issue that whilst I subscribe to not attacking HMRC too much, and I understand the concerns, this is an issue that in terms of culture that needs to be addressed, that tax administrations and HMRC as well as others needs to assess the effects overall of their actions as opposed to just maximization of revenue. I would like HMRC to have other considerations in mind that just not the maximization.
Thanks, Rita. Richard, would you like to?
Look, this part of the culture which has been dominating HMRC since its merger with Customs and Excise, between the Inland Revenue and Customs and Excise in 2006. I mean, again, I've been around this scene for a long time, 38 years as a chartered accountant. When I started, I was in Southwest London. There were 3 local district inspectors in that area for the revenue. I got to know them all because I had it was one of understanding.
I think the sound's temporarily gone there, so maybe we'll come back to Richard. Dan, would you like to come on that?
Yeah, absolutely. I think I want to just associate myself with the other panelists in terms of compassionate behaviour, especially in terms of those simply unable to pay. And I think the one thing the coronavirus pandemic has highlighted is that so many people are being thrown into financial hardship. We've got changes being relaxed in next month around renters and being evicted. And all those things should be on the top of the political priority to make sure that people aren't being forced out their homes or forced to pay bills they simply can't afford for reasons that are outside of their control. Just on HMRC itself, I think Richard may have been going on to make the point I'm about to make, which is that we've seen an office closure programme, we've seen HMRC being centralised into 13 regional hubs and offices in London, and the loss of thousands of staff. And the effect of that is to see the number of inquiries into tax going down by 1/3, I think was highlighted in the report today. And those inquiries are incredibly profitable for HMRC, and they tackle the correct areas that they should be tackling. And if those are going down at a time when we should be replenishing our public finances, that is a real worry, and Jessie Norman should be getting on top of it and supporting the HMRC to do its job properly. Finally, you would expect me as a Labour MP to work closely with the PCS union on all of this, and I meet regularly to hear their concerns and to reflect those back to ministers as well. I suppose I'll just end my comments by saying thanks very much for inviting me along tonight. It's been a real pleasure to be part of the panel.
Thanks very much, Dan. Should I open up to any more concluding remarks? Should I go back to Richard if you... Sorry, we cut you off there briefly.
Sorry, I actually dropped out in Valley and then reconnected. I was going to make this point about office closures. We heard the government saying recently, wouldn't it be great if people in Middlesbrough could have their tax affairs determined locally? Well, they did until recently, and you shut the office, I'm afraid, and that's what's happened. We have this absurd situation, for example, Customs office to Felixstowe, our biggest port, is 120 miles away. This is just ridiculous. This is part of actually democracy. Tax is the filling in the social contract between government and people, in my opinion. It is a contract, and it isn't seen to operate in our communities. And I think it's fundamental that we do need tax offices where people can visit them, talk to them, get help and advice face to face, and manage their affairs and see real people, and not on the phone for 15 minutes on average to achieve that goal either. We need to rethink this relationship between government and the taxpayer to make sure that this is tax is much more than about revenue. It's, I say, a social function as well, and that's what's key. But Dan, you covered my point about local officers very well. Thank you.
Thank you, Richard. I think we're running out of time now, so I'll just to say thank you for coming along to speak to our members and guests today. You've been a fantastic panel, and we really appreciate you taking the time out of your schedules to join us. We know you're all very busy. Thank you to our members and guests for joining us this evening and for contributing. If you'd like to find out more about the Economy and Finance Policy Group, you can find our blog linked on the Fabian Society website. And if you'd like to continue the conversation online, our Twitter handle is @FabianFinance. Thank you again, Dan, Richard, Rita, Andy and Robert. You've set out some important ideas for us to take forward. And thanks again to our guests. Have a lovely evening.